Good evening, everybody. Mike Vacchi, PrincetonTrader.com, here with your evening recap for Monday night, October the 7th, 2013. Okay, today was all about the close. We ground higher, the majority of the day. We made the lows right off the open, kind of like, basically kind of like Friday. It was really shaping up like that kind of a day. But we made our high around 2 p.m., and then things turned. The bears really controlled the close, and they pushed that down into the Globex. I think that the reality of the shutdown is setting in. I think the reality that the shutdown is now completely linked to the debt ceiling, which is a much more serious matter, I think, with respect to global financial markets versus a shutdown. I think the reality of that is beginning to concern the market. And, a lot of people have talked about I put in the room for our people today that, this is about the time that you see the market maybe send a message to Washington that they need to get something done. And I saw a lot of that on Twitter tonight, and I completely agree with that. My only concern is maybe it's not going to happen because there are a lot of people looking for it. And any time in the market you see a lot of people looking for one thing, it doesn't really pan out that way. The best example of that was back in July of 2009, where we saw the head and shoulders of all head and shoulders on every segment of CNBC. Everybody talked about it, how we had made the lows in March, and now we were in July. We were doing this head and shoulders, and so when that broke, then we were really going to go see some lows, and 666 wasn't going to be anything. And everybody was looking for it. Everybody got short. And the neckline on that thing popped, and basically we've been rallying for 4 years. 4-year rally. So, I think a lot of people are looking for the market to really go down. Unless there's some type of a news event that would push it down, like if they did bring that clean CR to a vote and it failed, you'd see a serious sell-off. It would be like when TARP didn't pass the first time around. But I don't think they're going to make that same mistake twice. So we kind of sit in limbo. And, we're down into this oval area that I drew last night. The lower band and the double fib. Up here we've got the middle band and the double fib. And absent news, the middle band is really looking like a bridge too far. So what's our rule? We trade between the middle band and the lower band. We sell rallies. And that's what you needed to do today. We saw the rally all day long, and that rally got sold into. And, we made our high 79.5, and we've traded now as low as 62.75. So we sold the 74. We sold 74 quarters before, in the last half hour there, and I'm flat now. I took half of it off for 4. I took the rest of it off for 8. So I'm flat. I don't plan on putting anything on tonight. It's about 11:40 p.m. We'll see what Europe does with it. I'll see how it shakes out when I get up in the morning. But I'm just saying that just to reinforce that we are in a sell rallies part of the chart, at least on my stuff. So just understand the big picture of where we are, and that we may need to pull back further. But I told my subscribers in their webcast tonight, you have to have a plan. If we do sell off hard, the chances of the overall uptrend ending are not very good. We've been going since 1340. You could pull back all the way to 1598 here to the 200-day exponential moving average. Pull all the way down there, and the uptrend would still be intact. I mean, this is just mean reversion. Do I think we're going to go down there? Probably not, but we could. And if we did, so be it. This whole move that scared everybody in June was a move to 53 quarter. That was a 38% retracement of what at that time was the total move. The 1340 quarter to this high, the 85.75. Wasn't even a 50% retracement. Not even a 62%. Just a 38. If we did a 38 this time around, it'd be 1579. And before you go, whoa, what are you talking about? 1580. We're trading 1666. You're talking about, 80 handles. Well, yeah. I mean, it's not like we haven't traded there. I mean, we were there in June. So, I'm not sitting here saying, I'm not being one of these people that comes on CNBC and says we're going to see, Dow 25,000 or Dow 3,000. Just talking about 1580. I'm talking about a 38% retracement of a gigantic uptrend. And I'm not saying it's going to happen, but what I am saying is this market could get upset between now and the 17th of October, and we as traders have to prepare for that. What are you going to do? You need to start working out scenarios in your head so that you're prepared for when it comes, so that you aren't getting, so that you aren't shorting the lows, not buying the low. You're not. I don't want to hear about shorting in the hole way down here, and I don't want to hear about a failure to buy the dip. We're going to dip. We're in the midst of dipping. Okay. But we got to keep our heads straight, and the only way to do that is to prepare. Preparation leads to execution. So let's see how the market plays out in the next few days. Let's see if Washington can get anything done. If they can't, then we need to begin to prepare for a larger move down and prepare to execute on that with some trades. Okay, have a fantastic night. Follow us on Twitter at Princeton Trader. Check out the website. Check out the chat room. I will be out in the morning with pivots and with a pre-market webcast. Trade them well.